to Agoracom's Small Cap Breaking News, your daily go-to source for the best small cap headlines for over 65 million investors since 2007. We've got five really urgent market-moving announcements hitting the wires today. These demand immediate investor attention. Our mission this morning, simple: skip the fluff, get straight to the hard numbers, and really understand the catalysts. We're talking key financial incentives, critical drill results, operational execution milestones, the stuff you actually need to know.
Exactly. And that urgent approach. It's necessary today because, the sources we're diving into cover some truly defining moments for these companies. We're looking at things like aggressive legal moves with huge potential payoffs, major deep drilling hits confirming geological scale, and also the validation of scalable cash flow models in, challenging new places. Each story really covers a genuine pivot point, giving you, the listener, high leverage data for your own deeper research.
Okay, let's kick off with a story that honestly sets an extraordinary precedent, especially in life sciences. Quantum BioPharma, symbol QNTM on the CSE. The headline reads, Quantum BioPharma offers up to $7 million for whistleblowers in market manipulation case.
Yeah, this is unusual and
Yeah.
extremely aggressive financially speaking. We're talking about a public cash reward up to $7 million USD, and that's for definitive, verifiable proof of stock manipulation. Things like illegal spoofing or, spreading false info. This isn't just some standard regulatory filing. It's basically a public bounty, right, designed to force cooperation.
And that number, $7 million, it seems huge, but it's proportional, isn't it, to the stakes involved here. This reward is tied directly to an ongoing U.S. federal lawsuit where QNTM is looking for more than $700 million in damages. The allegations cover, January 2020 to August 2024, focused on alleged illegal spoofing.
Exactly. And what's fascinating, I think, is the calculation behind this move. Offering such a big sum publicly, it signals extreme confidence in their case. Or perhaps maybe an institutional frustration with the traditional ways of doing things. They're sort of bypassing the typically slow regulatory bodies, trying to encourage insiders to come forward quickly with that, that smoking gun for the $700 million case.
Right. But is it calculated confidence, or could it be seen as maybe a bit desperate to force an outcome? I mean, $7 million is a lot of cash for legal discovery.
It's definitely high stakes, no question. But legally, I'd argue it's highly calculated. Think about the message it sends. It tells the market, loud and clear, they're willing to spend big to prosecute illegal activity. And it suggests they believe the information they need is out there, it's verifiable, actionable, and worth way more than $7 million if it helps secure that $700 million judgment. For the business community, it shows this really firm, transparent stance against alleged bad actors. That itself can boost investor confidence,
Okay, shifting gears completely now. From the courtroom drama to rocks. Specifically, Canada's famed Golden Triangle. We're looking at Tudor Gold Corp, symbol TUD on the TSX venture. The headline's clear. Tudor Gold's big strike in the Golden Triangle raises stakes for investors.
Right, and the crucial metric here, it's really about the combination of scale and grade continuity. This is at their Treaty Creek project. So, hole GS 25-190, it delivered a very strong bulk intercept, 1.70 grams per ton gold across 73.5 meters. That's, a really solid interval for a large system like this. But the real news the bid investors focus on is that high-grade core within it. Get this, 10.5 meters, graded 4.41 geared gold.
Wow, okay. Hitting that 4.41 core, that's what really makes the economics work on these things. But why is this specific hit so important for their overall geological picture?
Because it bridges a gap. That's the key takeaway. Historically, the big challenge in the Golden Triangle is proving that these nice high-grade zones actually, connect up. This strike successfully links two previously sort of separate high-grade areas. They call them the 300H and 300N zones. They're within the main structural corridor, SC1. So this moves the project from just having pockets of good grade to showing real structural continuity. And that significantly de-risks any future mine plan.
That makes total sense. Continuity is gold, basically, for mining valuations. And it looks like that's where they're heading. They've put in a permit application for an underground ramp right into that SC1 corridor.
Exactly right. And that decision to build a ramp, it signals profound confidence in the structure they've defined. They're committing real capital, real time to enable year-round operations and detailed close-range drilling. And crucially, they mentioned they're targeting a refined resource update, aiming for Q4 2025, using a much tighter 5 by 5 by 5 meter block model.
Wait, hang on. Can you unpack that? The 5 by 5 by 5 meter block model, why is that specific detail a big deal for the market?
Good question. So when you're estimating resources early on, maybe for a PEA or something, you often use larger blocks. It sort of smooths out the grade averages. Moving to a small 5 by 5 by 5 meter model, that means they feel confident enough in how the grade is distributed to map out those high-grade zones in really fine detail, almost like a surgical map. This kind of definition is critical for planning how to actually mine the ore efficiently, and it gives engineers, and eventually financiers, much higher confidence. It basically shifts the conversation from, yeah, we've got gold, to we know precisely where the most profitable gold is located. Big difference.
All right, next up, an operational story. This one's centered on scalability. ES Gold Corp, that's ESAU on the CSE. Headline: ES Gold accelerates expansion plan with Columbia validation.
Okay, so the key here is understanding their core model first. It's this tailings-first strategy. Basically, they aim to generate early revenue by reprocessing old mine waste to tailings, like they're doing at Montauban in Quebec. The whole idea is to get cash flow going quickly, reducing their need to keep selling shares and diluting existing shareholders.
Right, makes sense.
So the catalyst here isn't a drill result, it's execution. It's validating this model outside Quebec. The news says their geology and engineering team is actually on the ground now in Colombia, in the Bolivar region. They're there to validate high-grade tailings potential and check out this Planta Magdalena project.
Exactly. This is essentially a real-time stress test for the entire low capex tailings to cash flow blueprint they've developed. Bolivar is the proof of concept. If this operational model can be efficiently, picked up and moved to a completely new jurisdiction like Colombia, well, that fundamentally validates their ability to create repeatable, high-margin operations across the Americas.
But hold on. Moving even a low capex model to a new country like Colombia, that immediately brings in a whole layer of geopolitical risk, regulatory hurdles, maybe infrastructure challenges that they just didn't face in Quebec, right? Doesn't that risk kind of undermine the core strength, the low capital cost? That is precisely the critical question the market's asking. Their operational execution. That's their answer. By sending the actual geo and engineering teams there to do the on-site validation, the metallurgical sampling, they're not just signing some high-level agreement from afar. They're actively working to mitigate that risk. They're confirming the, let's say, political and physical viability before they commit to building the whole thing out.
Okay, so the next thing investors are really watching for then are the lab results from the bulk samples they're taking in both Colombia and Quebec. Those results need to confirm the grade and, crucially, the metallurgy that the processing method actually works efficiently in both places.
Exactly. Those pending lab results are the very next imminent catalyst. They'll tell us whether this tailings-first model is just a one-off success story in Quebec, or if it's truly a scalable engine they can deploy elsewhere.
Okay, let's head back to exploration, this time in the western U.S. Provenance Gold Corp, symbol PAU on the CSE. Headline: Provenance Gold expands Eldorado West with major discovery in Oregon. 1.01 gram gold, over 108 meters, signals broad mineralized system.
Yeah, this is a tremendous announcement. It really defines scale in two major ways. Just look at the numbers from the Herman area drilling at Eldorado West. Hole ED28 hit 1.01 grams per ton gold over a whopping 108.20 meters. And that was within an even larger interval, 172 meters. And the kicker, this mineralization started right from surface. Plus, they also hit a nice, tight, high-grade bit nearby in hole ED27. 10.16 grams per ton gold over 1.52 meters. Small intercept, but high grade.
Wow. Okay, 108 meters of gram-plus gold starting at surface. That screams bulk tonnage potential. But the geological significance you mentioned, the continuity. These holes were drilled 730 meters south of a previous good intersection. 730 meters, that's huge. That's like confirming a gold deposit stretching almost half a mile.
It is a phenomenal step out, absolutely. It confirms the gold system is large and incredibly persistent. It really elevates the discussion from, isolated hits to potentially a district scale system.
Yeah.
And the fact that it's near surface is key. It makes it highly suitable for low strip, bulk tonnage, open pit mining, which is generally much cheaper.
And they also mentioned discovering a new structural blueprint, something about a diorite metasedimentary contact zone. What does that actually mean for finding more gold?
Yes. That new contact zone, that could be the real holy grail for their exploration team going forward. Think of it like finding the predictable pathway for the gold. It acts as a reliable, high-confidence structural host. So instead of drilling sort of blind hoping for a hit, they now have a structural blueprint. It allows for much more efficient, targeted drilling. It strongly suggests the system is bigger than they first thought, and gives them confidence they can trace this structure effectively. That really underpins the potential economics for a cost-effective open pit.
Okay, before we wrap this deep dive, we have to talk about the sheer size of this last piece of breaking news. What's the single most compelling metric you saw today?
For me, it has to be this one from Ares Minerals Corp, symbol ARK on the TSX Venture. They're operating out in Kazakhstan, their headline. Ares Minerals drills 457.5 meters, grading 0.63 GPAUQ at Beresky East, strengthening the case for a major copper-gold system in Kazakhstan.
Hold on. 457 meters. That drill intercept is almost 1,500 feet long. That's taller than the Empire State Building is high.
That perspective is definitely warranted. It's huge. Hole EL25019 hit a truly massive 457.5 meters, grading 0.63 grams per ton gold equivalent. And that includes both gold and about 0.10% copper. And just like PAU, this monster intercept started right from surface. And to put a finer point on it, within that huge length, they found a really nice higher-grade core, 91.0 meters, grading 1.77 gram-second gold equivalent.
The sheer length, the continuity, it's just incredible. But what does the accompanying geology tell you? They mention copper sulfides, potassic alteration. What's the significance there?
That combination is absolutely key. The continuity, the massive length, and those specific mineral signatures. It all strongly supports the idea that this project is shifting. It's moving toward potentially being a large-scale porphyry copper-gold system. And porphyry systems, well, that's the geological architecture behind most of the world's biggest, longest-lasting, truly world-class copper and gold mines. Finding one is transformative. It changes the whole investor perception almost overnight.
So it's transformational not just because of the length, but also because it starts right at surface, making it potentially ideal for an open pit down the road.
Absolutely. Starts at surface, huge scale.
Yeah.
That's the ideal combination for open pit potential. And then you factor in the location. Kazakhstan is a known, prolific global mining belt. Plus, they have existing infrastructure nearby like rail and power. This result honestly elevates ARK immediately. They go from being maybe an early stage explorer to a serious contender for developing a major globally significant asset. #outro.
Wow. Okay, we have covered a massive spectrum of breaking news today, from the really aggressive legal and financial pressure QNTM is applying with that $7 million bounty, all the way to confirming these geological giants in the making with Ares and Provenance.
Yeah, to quickly synthesize today's catalyst, we saw the market reacting to, well, financial confidence and different ways of managing risk. Financially, you had QNTM showing it'll spend big to chase that $700 million lawsuit, and ESU trying to de-risk its scalability by physically validating its model in Colombia. That's risk mitigation in action.
Yeah.
Then geologically, just incredible scale confirmed. ARK with that monster 457.5 meter hit, PAU proving continuity over 730 meters right from surface. These are the kinds of results that really establish a new baseline for valuation for these companies. Defining moments, truly.
And our objective, as always, was to give you the key numbers and the so what for these 5 urgent stories. Basically, the essential fact-based intelligence you need to decide where you want to focus your own deeper research.
Exactly. And maybe here's a final thought for you to explore as you dig deeper into these stories. We saw multiple companies today, Tudor, Provenance, Ares, all confirming geological continuity and significant scale. So ask yourself this. When a junior explorer makes that leap from just reporting, sporadic high-grade hits here and there, to actually proving a consistent, continuous, and potentially mournable structure, especially one suitable for open pitting, what does that transition actually do to its market valuation, maybe even overnight? How much is that geological confidence premium that jumped from potential to probability? How much is that really worth to the market in the short term? That's the critical question these kinds of results raise for every investor watching.